I'll be providing a brief update regarding the OIS Index, an ophthalmology industry stock index, which we launched at this meeting a year ago as a tool to track the investment performance of publicly traded small and mid-cap growth companies in ophthalmology. It's a market cap weighted index with the largest companies capped at 10% of total index value. We update and rebalance the index quarterly. Over the past year, we've added 4 companies and removed 2, bringing the total number of companies to 31, and there's been a pretty consistent 70-30 split between biopharma and ophthalmic device stocks. Over the 13 months since inception, through November 1st, the OIS Index has declined in value by 12%. Rather than absolute performance of an index, it's usually more instructive to look at performance relative to the broader market and to industry benchmarks. And unfortunately, the OIS Index has turned in an even more negative relative performance. The OIS Index, which is the blue line on this chart, has underperformed the U.S. stock market as well as the medical device and biotech sectors, and has failed to participate in the broad stock market rally that we've seen over the past year. If there's any good news on this chart, it's that most of the underperformance took place at the end of last year and the very beginning of this year. And if you look at performance in recent months, it's been more competitive, particularly relative to the biotech sector. It's interesting to note that our index methodology itself has had a dampening effect on performance so far. As is the practice with many sector industries, we cap the valuation of the largest companies to prevent them from dominating the index and to allow the smaller companies to make an impact. However, some of the largest companies in the index have been the ones that have turned in the strongest stock performance over the past year, and this has been underrepresented in the index. If instead we had used a simple market cap-weighted approach without valuation capping, the total return would have been a positive 1% rather than a negative 12%, so a 13-point difference. The largest positive contributors to index performance have been Aerie Pharmaceuticals, Carl Zeiss Meditech, and Spark Therapeutics. A couple of high-profile pipeline setbacks for Ophtotech and Inotek led to the underperformance of the index in the first quarter out of the blocks. In the interest of being more forward-looking, here are some key events that could drive what I hope will be better index performance over the coming months. For Spark Therapeutics, Luxturna for inherited retinal disease is under priority FDA review with a January 12th PDUFA date. Aerie Pharmaceuticals has a February 28th PDUFA date for Repressa and expects to file the NDA for Rocklatan in the first half of next year. And on the device side, Glaukos expects a full PMA filing for iStent Inject by the end of this year and could initiate clinical trials for iDose and iStent Inject standalone early next year. We welcome your feedback regarding the OIS Index. Feel free to get in touch with me, with Craig Seamack from OIS, or with Emmett Cunningham, who's been involved with this project as well. Thank you.